Good turnaround Tuesday, everybody. How's everyone doing? Everyone see the Dixie chart up there? Hi, Sinatra. So this doesn't surprise me. Talked about being at support that we could rally back to 100. We're either going to stall here or head up here for like a third attempt. I'm still not looking for new highs in the dollar here. Not seeing my screen? Okay. How about now? Got it? Okay. All right. So this is about halfway back from last week's decline from resistance. So we could turn here. Otherwise, we're going to make a move towards 101. Still think that this is some type of triangle developing, descending being the key word with this support level. I am surprised at Euro weakness that it gave up 109 so easily, and here we are at this 830 level. Is pretty important. The only other scenario would be like what I was talking about on the um, dollar index, is we get something like this, okay, which wouldn't quite make a new low. It being Tuesday, you could turn it, but I'm also pretty surprised how Euro pound gave up this 87.40 without much of a fight. I thought it was a pretty important area, and it just blew through. We're not quite at new lows, but I'm not doing anything new here. Tried it yesterday here, and I'm risking the lows, so it doesn't look great. So sometimes you come into the day with positions you put on, and I've always been torn about putting positions on Monday. When I don't, they work, and when I do, I always say, "Why don't I just wait for Tuesday to get a read on the market?" Still thinking there might be one more push up in gold. I was talking about Newmont yesterday, didn't quite achieve the third drive, so we're not that far away, maybe about, where are you, Newmont? Here you are. About $3 a share or so. See, we're starting to make this attempt for a third drive that could come in around 65, 66. So we'll see what happens here this week. Maybe it's going to be into Thursday. There is a super moon on Thursday. You could get some inflection points there. And I do have to say, from last week, despite um, risk off, and it was pretty good risk off, bonds haven't made much progress. There was no big flight to quality last week. Notes are, you know, stuck, not making new lows, trying to hold. And actually, if you go to the long end of the curve, it's actually weaker, and we're getting, a bit of a steepening in the curve. I think that's what the Fed wants. You have questions? Let's see. Here's the chat. Yes, I back tested it. Yeah, NFP on Friday too. You're right, Tio. So I back tested it by trading it for 20 years. They don't all work. And sometimes there's only two. And Mark, I also use an RSI filter for higher probabilities, three drives. So I didn't back test them. I learned it from J.R. Hill in the 70s, and think about how much the evolution of trading has happened since then. Yeah, gold, Shahab, I still think there's another push up with the mining shares. I came up with this line here, which kind of looked like, we could get some type of three. Well, Maybe another shot towards the 1730 range. Doesn't look possible here, but you just take this range, 1690 and 1707, and that could take it there towards 24 to 30. Okay. So I want to remind people about our subscription service. And I would say, Davi, you know what would be great for you is to join and be part of our chat room after Face. And you're going to hang out with people that pay their mortgage through trading and surround yourself with good traders and you rise to that level. What do you think of that suggestion? My voice is low. Okay.
You sound good to me, Coach.
How about now?
Morning.
Okay, good morning. Anyway, that's what I would, if you have a lot of questions and you
Good
want to
morning,
learn.
Dale.
Hi, buddy.
Your voice sounds absolutely fine. So probably our friend needs to check, their volume or their settings or whatever.
Okay. All right. So just something to think about, it's not just what happens here in Face, it's that you have access. And in the chat room, you could ask guys like Blake and Stell, and, the whole crew is in there. Plus, you have access to these minds to learn. Ziggy has a suggestion for me that I think I'll pass on. But look at this team. So when you're in the chat room during the day, you could shoot a question to Blake, and while Blake's trading, he's putting up charts. Grega drops in once in a while. Stelios is there all the time, a lot of the time. Steve is there a lot of the time. I need to go in more often. Joe is in there. Paulie's in there. Here's another reason to join, and it's European crossover with the daily bias chart that's going to give you great scalping entries, important technical levels that Paulie identifies for you every morning before the U.S. opens. And Amanda's an excellent trader. People follow her and coattail her and harass her. And she does a great job in the chat room. So I guess Andre drops in there at times. So, you have access to the whole team plus 100 or so people, and I'd say at least 50% of them are professional traders. That's all they do. And it's a very supportive, collaborative environment. And there's no such thing as a silly question in there. And you'd be surprised at how many people out there. Yeah. You'd be surprised how many people out there want to pay it forward and know what they went through when they were starting off and want to help you avoid the landmines that they stepped on themselves, and also teach you a few tricks that you'll be able to use the rest of your trading career. So I'm very bullish on Forex Analytics, very bullish on the team, and it's a great community in the chat room too, because you're going to have to spend more than 1 hour a day listening to our analysis to get good. You're going to have to dedicate yourself to it. You're going to have to put in the time, and in our business, it's screen time. If you want to learn to become a discretionary trader, independent of everyone, dependent on no one. So you can't learn experience, but you can learn from the experienced. And there's well over 100 years of experience here in the team. I'm 95 of it.
Over 100 years of experience just from you, Coach. Imagine adding the rest.
Anyway, get your calculator out. Thank you, Steve, for making me feel brand new. I think there was a song, "You Make Me Feel Brand New." Anyway, so Blake, good call on seeing the vulnerability of the euro yesterday. I was surprised it took out 109 so easy, and 105 isn't 108.50 isn't providing that much of a floor yet. Where's your head at on it now? We go into 105 if we take out 108.
I mean, we're and good morning, by the way.
Good morning, buddy.
Yeah, we're at the 618 retracement right now. So,
Right.
it dropped a lot faster than I thought it was going to.
Was that Europe or that big candle?
Yeah. So the news overnight, just in case you missed it, everybody that was in our chat room, in the Forex Analytics chat room, was aware that there was going to be a ruling this morning at 4:30 a.m. Eastern. We all knew that it was coming out, and if you weren't aware, sorry that you missed that. But we were talking about it yesterday. I actually pulled all my euro orders overnight because I knew it was going to be in the middle of the night while I was sleeping. So, German court ruling, hit the wires right around the 4:30 in the morning Eastern time, and it questions the ECB's quantitative easing program. And the court is basically giving the Bundesbank an ECB 3 months to modify its main quantitative easing program. And the ruling doesn't apply to the new PEPP program, the PEP program that they just enacted. Was it last week? I guess, but the court is really what it's doing by kind of saying, hey, you need to make some adjustments here. It's really showing us that Europe doesn't have that cohesiveness that we as investors want to see out of the European Union. And Germany is really, kind of stepping in and saying we're not approving of what the ECB is doing. And that kind of goes along with the sentiment that I had during the Trader Summit, is that until there's this more of a cohesive fiscal union, the euro is going to be continued under pressure. Now, that doesn't mean that I should short the euro right at this moment in time. I mean, the euro's come off from the 110 level, and now we're testing the 618. Matter of fact, it's probably more of a candidate of bouncing soon. But that doesn't mean that I want to play long either. I'll be actually looking for a move back towards 109, and looking for an opportunity to sell it. I had some orders yesterday to sell the euro at 109.50. Obviously, we didn't come anywhere near that, and I'm a little irritated that I didn't take advantage of it. But that's kind of what I was looking for at that moment in time, is I was looking for a little pop to sell into. But now that we're down here, I would like to see the euro rally a little bit rather than trying to get short here. Like I said, we're at the 618 retracement. There's no sense in trying to chase it down here. Chase it down here after such a big drop over the last couple of days. So, with that being said, many of you, I know you're thinking, so I'm going to go ahead and address this right now. Many of you are like, well, if you think it's going to bounce, why not play it on the long side? Look, you can try to play both sides of the market. I'm not here to tell you what you should or should not do. I will tell you that I'm not very good at trading both sides of the market. I tend to be very biased in my trading, meaning if I have an idea that I'm trading, I tend to only trade in that direction and nothing but that direction. Because what happens is, if I try to trade counter to my ideas, then it throws me off personally as a trader, and I tend not to be very good at it. So if I'm a euro bear, which I am right now, what I'll be looking for, and I'm not going to give you specifics at this moment because I don't know what they are, but I would be looking for a rally like this to sell into. Again, I have to do some work here and kind of figure out exactly where that price is, but I want to see what the action is here too, because what could happen is that the stock market because this is my big hang up right now. The S&P is at the, this is the 50% retracement, close to the 50% retracement on the S&P. So what I'm expecting here is a bear flag pattern. And if that happens and we start breaking lower later on today, then that's going to usher in some dollar strength. So I don't want to be selling dollars, and then all of a sudden the stock market starts rolling over, and then I'm going to get stuck being being long euros as it comes under pressure. So I'd rather not do that. I'd rather find the path of least resistance, which I feel in the euro is lower, just not at these levels. And I miss trades by doing that, but that's okay. I've come to the realization over the last 20 some odd years that the market's always going to be there. It's not like it's like this is the last opportunity that I'm ever going to have in the FX market to trade. I don't approach the market every day with that attitude. Not at all. I approach the market with the attitude that opportunities are going to present themselves on a daily basis. Good opportunities, like solid get kind of aggressive opportunities. They may only come by a couple of times a month, but there's always opportunities in the market to take some money out of it on a daily basis. So for me, the way that I trade, excuse me. So that's what I'm looking for. Sorry, I didn't mean to yawn on you guys, but I get up at 3:00 in the morning over here, so I'm a little tired. Dale, you know how I feel. Dale knows exactly. I know, Dale, the problem is for you, Dale, is at least I get a break, 5 months out of the year.
Oh yeah.
For the time change.
Don't rub it in.
Yeah. I know. I mean, that's crazy.
You guys are crazy. You consider a break instead of waking up at 3 a.m, waking up 4 a.m?
that is.
I sleep until almost 6:00 on the weekends.
That's good. I can sleep until about 5:15. So that's good on you. I'm glad. Yeah. I'm glad somebody can. I know, Steve. Actually the last time that I slept until like 8:00 in the morning was when I was in Greece. That was the last time I actually. No. I take that back. I took a week and a half off and went to San Diego. Not last summer, the summer before last, and I was sleeping in till like 7, and it felt good. All right. Anyway, let's talk about some of these other pairs. So here's the cable. The cable is finding some support down here. A couple of banks are pretty aggressively bearish. The pound here. I can't remember if it's Bank of America or Citigroup. One of the two are looking for the cable to trade down towards 121. Personally, I would want to see this trend line broke, but I think the euro could bounce from here. I'm not saying it will. I just think it's possible. If the euro does bounce from here, then the cable might get a little bit of a lift before we break down. But I'm kind of in the camp that as long as we're below 126, there's no reason to be on the long side after a nice recovery. And overall I do think that the dollar is going to strengthen. So selling strength in the cable probably makes more sense above the 125 level if we can get it. The Aussie I think are at levels that need to be sold. And the reason why I say that is because this is a false breakout from last week. So let's just let me take you over the weekly chart.
Blake, I have to say, and I thank you for it, I learned something from you last week. And, I've been trading EG for a long time and correlate most of it to what's happening in FX. But your point last week that they seem to be able to they lean on cable more during times of risk off, and euro pound therefore performs better during periods of risk off than risk on, and I'm starting to notice it. Great observation.
Thanks. That was between a conversation between myself and a guy out in New Jersey who trades for us, and who's ex bank trader for. He's actually a couple years older than me. He's been trading for almost 30 years. We were talking about that, and but you can't take it too much into consideration on days like today where there was overarching news that's actually driving the euro. But yeah, I think overall, when we're in a risk off scenario, you're going to probably see the cable underperform a little bit.
Yeah.
So yeah,
great insight. Thank you.
Thank you. The Aussie, we had this false breakout last week. So the reason why I say that is because now, any rally probably above this, this 50% retracement somewhere around here, the 64.70, you got to look at it as a possible short. I think I wouldn't be surprised if the Aussie today just hits a brief high like this and then rolls over. So, kind of wait for it if you can get it. If you can get a good pop into the, into the 50% retracement, that might, you can see a little resistance right there. That might be a good place to be on the short side of the Aussie. Kiwi's not really doing much. The dollar Canadian, we're in this, I believe this was the chart of the day yesterday, if I'm not mistaken. I kind of have to go back and think what exactly I did yesterday. Yeah, I guess it was. You can see it's the chart of the day. But whoops, I didn't mean to do that. I'm already signed up for Forex Analytics. Hey, imagine that. Oh,
hope you're paying.
Yeah, I guess I am. So what I'm looking at here in the U.S. dollar Canadian is, this double bottom actually is, and I'm actually looking to play it as a double bottom, but I see that it's in a bearish wedge. Now the reason why it's bearish is, let me go ahead and grab my pen. The reason why it is bearish is because we have consistent lows and lower highs, right? Lower highs, lower highs, lower highs. So lower highs, consistent lows, which means there's a higher probability of a downside break, but I already know that going in. The reason why I'm more bullish the dollar Canadian is, first of all, I think the Canadian data, jobs data on Friday is going to be worse than Canada expects. I'm not necessarily thinking that the U.S. data is going to be better, or worse than, or better than the market expects. However, sorry, I didn't mean to yawn again. It's just, you can't stop it when you get up at 3 o'clock in the morning. The reason why is I think the dollar is more of a risk off currency. So even if the data is worse than expected, I think the dollar will outperform. Does that make sense? So I'm more in the camp of trying to buy the dollar Canadian on a dip. So what I'm looking for here is I would look for, whether it's right at these levels. Actually, you know what? Let me go back to, it's probably easier to do it this way. So for the dollar Canadian, if we can get a move maybe to one right here, 39, like 60s, 50s, somewhere in this neighborhood, that would be the place that I would actually look for dollar Canadian longs. And I'm gonna try to pick some up. And even though I want the opportunity to buy it down here, I don't know if we're gonna get that opportunity. I just don't know if it's gonna present itself to us. I'm hoping it does, but it may not. I mean, we could end up doing one of these, we can end up doing some sort of pennant, some sort of flag pattern, and it never makes it down here. It may flutter around like this and then boom, then take off and never get an opportunity to buy it down here. That's possible. And I'm not going to ignore the fact that can't happen. I am bullish once we get above this trend line right here, this pink trend line that you see. That would make me bullish, but it doesn't. For right now, it looks like that we might be able to come down and get to the areas that I want to be on the long side. So that's what I'm looking at with the loonie right now. And also one last thing, I guess I'm going to bring to your attention, especially if the stock market starts to see a little risk off. The dollar Mexican peso, this is at a big, big triangle pattern where, the apex is building. So it's obviously very whippy inside of here. When it was down here last week, if you guys remember the face webinar last week, I bought it at 23.77 and then I sold it at 23.77 and it dipped a little bit and then ripped, and I could have made, I could have made my entire week last week in that move right there, but I wussied out. And we're down here retesting that trend line again. And the fact of the matter is if the stock market starts to see some downside pressure, the dollar Mexican peso is probably heading back above 24.50. So it's something to be watching, around these levels, whether we've already tested the trend line and we're holding it, or, we have a little bit further to go. I think it's worth keeping your eye on. So with that being said, guys, make sure you visit our webinar sponsor, Forest Park FX. If you didn't get to hear Justin and his presentation on last Wednesday, it was a really great presentation. We've been working with them for years, and they are so good at finding you, the individual trader, a broker best suited for your needs. So if you want to reach out to them, you can get their information to how to contact them on the reimbursement program tab of our website. And this goes to their Skype or their email. Even though it's email for us, it actually is managed by Forest Park FX. So make sure you reach out to them, so you can be part of the reimbursement program, or you can get some cashback rebates from your trading. But
Rakesh is asking Blake if they can join Forest Park FX if they're in the EU, and the answer is absolutely. Wherever you are on the planet,
yeah,
they're working with more than 1,000 brokers, but all of them, of very high quality, so they can steer you in the right direction no matter where you're located.
Yeah, and that's that's the thing is, if you're in North America, if you live in Canada or the US, you're not going to be able to qualify for the reimbursement program. But hey, at least you can go into a cashback rebate program, and it might even be with the broker that you're already with. And then all you have to do, like that's what Steve, you did.
Yep.
Steve was with the brokerage firm that he's with. You guys don't need to know that information, but he, had to sign a couple of documents from Forest Park FX, and now you get cash back, right?
Absolutely, without having to do anything else.
Yeah, so it's definitely worth your time. All right, guys. Well, good morning, Steve. Good morning, Stelios. How are you guys doing this morning?
Good morning.
Good.
We have a little bit more activity than we had yesterday. Yesterday was really slow. Today I got up and I'm like, ooh, I get to update charts, and I get to, I had a couple of trades that went off overnight. So I'm excited that we got a little bit of activity today. So hopefully that continues throughout the course of the day. Coach, thank you for always being here at 0:30 in the morning. And Steve and Stelios, I'm going to pass it over to you two gentlemen.
Thank you,
Thank you very much, Blake.
Thanks, guys.
Have a good one, Blake.
You too.
Good morning, guys.
Good morning,
Coach.
How are you guys?
Good morning,
Very
everyone
well.
else.
It's nice and sunny. Nice and sunny here, so can't complain. Yeah.
We have US trade balance and Canadian trade balance, not something that I expect to move the market. In the old days, trade balances, trade deficits, and all that were actually quite important for FX. For a very good reason, if you ask me. But nowadays, how much the Fed expanded its balance sheet and things like that are, a lot more important.
Plus, trade balance has been greatly affected by the virus, and so we're going to get numbers which are going to be a little bit out of the ordinary.
Can you guys imagine what used to be important? We used to, hang with bated breath for money supply figures every Friday.
Yeah, I know.
Yeah.
Can you? Oh, you remember that?
Because back then,
now because
back then they remembered the importance. Back then they remembered the importance of money supply expansion. Nowadays we're acting like it doesn't matter at all. There we go. We got it.
Okay.
A little bit better trade balance for the for Canada, and a little bit worse for the US.
Yeah, it's not going to do much. Yeah, so we had a little bit of movement today. Firstly, because of stocks, major indices are up like 1% on the futures. And also, like Blake correctly said, the German top court gave a 3-month ultimatum to the ECB to fix its assets purchase program. The question is, how do they fix it? Yeah, so this gave the euro a little bit of a dent in its recent move, but nothing major yet. We had some other data this morning. PMIs out of Australia and the UK, both in the teens. I've never seen numbers like that before. I think in 2008 they didn't get to these numbers, and it's really shocking to see that. But it is a very logical development after this severe lockdown that we're seeing. We had inflation data out of Switzerland came in negative, and
that's not a big surprise though. When the Swiss,
yeah,
I think more or less, oppositely from what they will openly admit, they have a fine understanding that there is no problem with deflation. They're not, in essence, really pursuing to do something about it. I mean, yeah, they do have negative rates, but I think that that's mostly for the situation with the Swiss franc not to become, too excessive. Other than that, I think they're very content with how things are there.
Yeah, and they've had negative rates for a while now, and
yeah,
they're sticking to it. Conversely to Sweden, who had negative rates for a bit, then went back to zero. But they are very comfortable. The Swiss franc has been the target of inflows for a while. It's a safe haven currency, so they're more than happy to charge people for the convenience, right? And we know what the SNB does. They sell Swiss francs, they buy euros or dollars, and then they go out and buy Apple and Amazon or whatever else they like, which is nice. The thing again, today's equities, I talked about them yesterday. It looks like we will get one last blow off top, I think, in equities. We need to get sentiment reverse and positioning. We have been quite bearish in terms of positioning. And I think it's not unlikely that we might see, 2950, even 3000, the S&P. I don't know how far it can go, but we need all those to reverse, and we need to get the FOMO crowd in. And then I think we're going to have a leg lower. And you know what? I was reading today about, the Americans have been saying, oh, this virus was manufactured in China, and there's been some harsh words. And now the Chinese state media targeted Secretary of State Pompeo, calling him liar and evil. So this is quite. Okay. I'm not making this up. This is actually what they said. It's quite strong language, and I fail to see how we can get sustained equity move higher with all this uncertainty of, first of all, how quickly will we bounce back from the lockdown and the effects of that. And also then we go back to the normal problems like US-China trade deal scenarios and etc. So I think we will might get another blow off top now, but I really do think that the next leg in equities is lower. Having said all that, if you ask me where I think equities are going to be in 5-10 years from now, I think they're going to be way, way higher. But
in nominal prices, I'm 100% with you, Stelios. Yeah. It's extremely high probability, yes.
In nominal
this rhetoric between the U.S. and China is very dangerous, because Mark Chandler, well over a year ago, said we were already in a Cold War with China. Okay, yeah. So all you need is a match now to change that, and there's enough.
I'm not so sure about it, Dale. I'll tell you what I mean. Do I think there is deep underground, the Cold War between the two of them for who is going to be the superpower? Absolutely. And personally, I've said it before, I'm very much afraid, because that's going to be really, really bad for global rights, democracy, and everything else, that since China is consistently playing the long game and the rest of the developed world economies and countries are playing, checkers, I'm afraid that China is in a good position to come on top, not imminently, but down the line, and I'm afraid that's going to be very bad for all of us. But I think that a big part of the escalation we see on occasion in headlines and statements, I think is more or less a game of pretense. For example, ahead of the US elections, do you have any doubt that there would be an escalation in language from the US side, no matter what? I don't think there is much doubt to that, especially now that there is a good reason. I mean, with the coronavirus, etc. So I won't be paying
you say
that
it's
much.
a good reason. Okay, how
Good
many
reason in
people
quotes,
died?
you know what I mean?
Yeah. Okay, how many people died at Pearl Harbor? A lot less than have already died from coronavirus.
Yeah, but it was a
Or-
different kind
alright.
of action, right? It was a different kind of action, and how.
But
it
it
was
still,
caused.
could be considered by hawks, China hawks, as an act of war. If they do believe there was some intent and it wasn't just an accident, they're framing it as an accident. So I'm just saying that we've gone to war over less fatalities than what's happening right now.
Yeah, but you in this case you have a decent reason to believe it was an accident, because I mean Chinese people died, and I'm pretty sure, because I don't try.
That's a good point.
I don't trust Chinese data. I'm pretty sure that the Chinese people that died are a lot more than the ones reported.
As much as
Yeah,
the
a lot
US
more.
has one quarter of the deaths of the globe, over 1/4.
Yeah, okay. We know that Chinese authorities acted a lot faster. There's no question about it. But on the other hand, I'm also sure that they had a lot more fatalities than they report. Okay. So I can tell you much more than that.
So, yeah, good cover.
Yeah. So I've told you my theory about conspiracy theories.
I know.
So in
I'm
any
just
case,
saying, but the rhetoric is not this inflammatory rhetoric is dangerous.
It is. It absolutely is. But on the other hand, I don't
not
think
just financially.
I don't think there's going to be much response for now to that rhetoric
from your lips.
I think so. I think there's not going to be much response. I think it's going to stay at the level of, exchanging accusations, threatening with measures or tariffs or whatever else, both sides, I mean, and probably I assume it's going to stay more or less at that level.
I mean, I hope so, because, I think we'd have a hard time doing our face webinars every day if the other happened. Don't you?
Yeah, I mean, I don't know.
Anyway, all right, enough of that. It just, and you talk about the elections here. What elections? Who knows what's going to happen in November?
I've told you my opinion about that. I think that the elections will happen. Yes,
they will happen.
Yes.
And if President Trump loses, he will walk away gracefully and concede. Is your
I never said
belief?
That.
Okay.
I never said that last part.
Okay.
And I don't even care to speculate about it. I mean, it's not going to, change anything. But I do believe that the elections in the US will happen normally, and by normally I mean at the preset date. That's what I mean normally. Now, if the circumstances are going to be weird, given the fact that there is a pandemic,
yeah, that's what I mean.
Yeah, that's different. But I do think they're going to happen, at the preset date. Yes.
Okay.
Okay. So, Stelio, do we have anything else, or are we ready to jump on the charts?
That was pretty much it, mate.
Perfect. Okay. So
thanks, Stel.
Thanks, guys.
Thanks as always.
Yeah, sorry I dropped. I'm Dale Downer today, like from Saturday Night Live. Debbie Downer.
Oh,
and the world's gonna come here and there. Anyway.
So, one last comment, Stelio. That is, it's a good segue also, because we have a lot of questions about Europers, so it's a good segue to the charts. It's funny, I see around that a lot of Europeans in essence are accusing the German constitutional court, for not playing fair, which I find quite funny because, in my opinion, it's one more proof that things in Germany work a lot better than they work for the vast majority of democracies. Theoretically speaking, there is a separation, of powers. Judicial, should be separated. And by the way, I totally agree. I think that monetary stimulus in what we've been seeing during the past 20 years should be 100% illegal for two reasons. First of all, it creates more problems in the medium to long term than it solves. And second, and most importantly, it's extremely immoral. It's immoral for the same reason why it is immoral for an economy to be borrowing with 30 or 50 or 100-year time horizons, which is you load a lot of the burden of current generations to the next generation or generations that they've made absolutely no choice to share it with you. They have no saying. You just push the problems, down the line and, get them to solve it for you, just to make your life easier today. And this is actually this type of behavior, which has been repeated again and again, is what has brought the so much pain to the economies, and the economies being in such a dire situation that they need solving all the time.
Hey, Steve, can you take a look at the Euro Swiss 4-hour? I like it down here for turnaround Tuesday play.
I can have a look if you want at the daily, because I would start by all the Euro pairs, and you can see what the situation here is with the daily.
Yeah.
We got rejected from a retest of the floor.
Right.
Undeniably, a downtrend since seems to have stabilized. At least there is, clear loss of momentum, clear RSI divergence, but
higher low if we hold here.
Yes, but as long as we hold within this descending channel, I would be very careful. I mean, I would want to at least see a higher high. You know what I mean?
Back over 106.
Yeah, before I can declare some type of a reversal happening here, because I mean it's now been.
That's the beauty of phase. We don't have to agree.
Yeah, it's exactly 2 years actually. Exactly 2 years ago, it was April 2018, slightly more than 2 years ago, we found that high, and ever since, it's a one-way street, right?
Yeah.
So it's a prolonged downtrend, undeniably. Now, do I believe that at some point we're going to see some, nice rebound from here? Yeah, I do. Yeah. But keep in mind that if you want to trade this, you should, which is one of the rare, one of the extremely rare occasions I would have to say that, you need to make sure you use quite high leverage, because this thing is barely moving. It's barely moving, right? So, I mean, what would look like a decent move here, under normal circumstances,
100 pips.
Yeah, exactly. It's not that much of a move, right? So, if you really want to make a trade here and make it count, probably you should, you should take into account the average true range of the pair, which is, rather subdued.
But I mean, the advantage is you could have a fairly tight stop too.
Yes, you
because
can.
of the low beta.
Yes, absolutely, absolutely.
Okay. All right,
absolutely.
So this is for this is my ARP trade. This is for senior citizens only. Euro Swiss. Okay.
Here is USD Swiss, 60. By the way, as well. I mean, strictly judging from the formation here, ideally, I would want to see breaking this triangle to the upside, retesting parity, and then perhaps turning to the downside. So, I mean, it's a triangle. Theoretically speaking, a break in either direction should, produce some follow through, but I would still favor a break to the upside. What that would imply for Euro USD, it would imply what I was saying some time ago, that I would still favor another move lower before higher. But, I've refrained from trading it, thankfully, and you can see why. I mean, we faked everybody out intraday, 24th and 23rd of April. that we would break down. We reversed. We then faked everybody out 1st of May that we might be breaking, you know, above the previous high. Now we're turning lower once again. So this is like a nightmare. Nightmare. I mean, this is the kind of thing I would never want to trade. In any case, you know, we now have a range. It's roughly 110 to 1075, let's say. You know, daily close above or below the aforementioned levels, I think, you know, should produce a decent extension one way or the other, but I would still just look elsewhere for trading opportunities. Now, Euro Yen posted a nice rebound from this 115.50, 116 area. You can see how important that area is even going back. Failed from the 38.2, produced an evening star formation, producing now some follow through for a second consecutive day, retesting the previous lows. You know, risk reward would tell you, okay, why not? You can attempt being long again. I mean, you have a very limited risk and the potential of another rebound higher. But alternatively, on the other hand, we break through this level and we might actually see an acceleration lower. So, you know, take it any way you look, you want to look at. One thing is for sure, Euro Yen, as we showed about Euro Swiss, has been in a continuous downtrend since February of 2018. So that's a 2-year plus downtrend. So, you know, there's no question about it. The path of least resistance remains the downside. Okay. Now, Euro Aussie and Euro Kiwi. Listen, if we see a continuation lower in risk assets, which I still think is a very, very high probability for at least, you know, several days of a sell-off, Euros and Euro Kiwi, despite Euro's underperformance during the past couple of days, I think they're going to do fine. Okay, so in the case of the Euro Aussie, we might just see a retest of this broken channel and another leg to the upside, for example, towards the 38.2. Okay, somewhere there. In the case of the Euro Kiwi, you know, you can even redraw this to show that we haven't even broken through this descending channel. But in any case, I still think that it's all about risk assets. So if risk, and let me go to risk so you understand what I mean. Let's go to a 4-hour of the S&P. So here's the 4-hour of the S&P. So if this failure up there is the beginning of at least a much bigger pullback, which I think there is a high probability scenario, we should see this rebound fail rather imminently. So we're back testing now quite an important level of resistance, roughly here 2875 to 2900. And if we fail from there, I would expect at least one more leg to the downside, in which case, at the same time that risk assets are selling off, I would expect Euro Aussie, Euro Kiwi, Pound Aussie. Let me pull Pound Aussie up on the daily. There it is, Pound Aussie. There you go. You see, perhaps a pullback, another leg higher, and Pound Kiwi to perform rather well. So that's how I'm looking at this for the time being. So I do think you should be rather careful trying to be short because we did see quite a strong reaction higher at the end of last week, and we might see at least one more leg higher for all these pairs. Can you take a look at crude, Steve? Crude up 120% from 28th April low. You're talking about crude CFD. Okay, you know something? I'm going to have a look at the crude continues. And yes, there is already a decent rebound. We found that the continues a low at 11.1, and we're currently at 1760. So it might look like a little blip on this chart, But from a percentage standpoint, that's a 60% move higher. So it is undoubtedly impressive. And I think that's going to be, at some point, just the beginning of it. Now, there is a very strong area of resistance here in the continues at $20. And I wouldn't be surprised to initially see a rejection from there, or even from a little bit lower. We're about to test the 38.2 of that last leg lower, which comes roughly at $18. So rejection from there, even new lows could be on the table. But I've said it since some time ago. I expected that crude might go to tens. And I'm talking about the continues now, because yes, it went to negative, and June contract might also very briefly go to negative again. But we know all the reasons that can, very short, in the very short term, create such an event. But I do think that crude oil within the year at some point is going to be a lot higher than where it was and where it currently is. Okay. Now, if you remember, I've kept saying again and again, be careful, because natural gas is also pointing higher. And yesterday I repeated again that, listen, $2 area to 205, quite a strong area of resistance. You should be careful there. Now look at the move we've had today. We've now broken through this rectangle, and we've in essence triggered that formation, which points to a move towards $2.50. So be very careful here, because natural gas is showing strength, and I think it might be pointing, the way higher. Okay. Okay. Yeah, having to do with that, Blake mentioned it, but I'm going to also briefly say here that, listen, look at the Aussie USD. Same type of formation we saw with the S&P. Let me overlay here, just, for the short term, the SPX. Okay. Let me change the color to make it more apparent. Let's change it to orange, for example. There it is. You can, and let's make it thicker. Okay, perfect. So look at this. S&P 4-hour chart is orange, and the normal bar chart is the Aussie. I mean, I don't need to explain how tight this correlation is, right? You can clearly see it here. So guess what? The same type of formation we talked about in the S&P, the same type of formation here. Bottom line, I think that current levels offer a very decent risk-reward ratio to be short. Now, if you're an amateur, I want to reiterate what I've said a billion times. There is no guarantee in trading. The only thing I can guarantee, and that I can guarantee from personal experience, is that if you keep taking high probability trades and you exert the proper risk reward ratio, you can become a profitable trader. End of story. Nobody can guarantee you that one specific trade will work out no matter how good it looks. Okay. But I can tell you that this one looks very good. Okay. So you can clearly see here what I said before. If risk moves lower from here, which I think is a decent probability scenario, Aussie is going to follow. And guess what? Obviously, the Aussie yen is also going to follow. This is the Aussie yen overlay with the S&P. You can actually see here that the Aussie yen, in the short term, you can see the overlay, has been even underperforming the S&P. So what this chart should tell you is that between the Aussie USD and the Aussie yen, if you want to trade risk, let's say that you're a US-based individual, and you don't have, let's say, access to the CFDs and not an easy way, for example, at your disposal to trade the S&P, and you want to trade, for example, the S&P via an FX proxy, that should tell you that the Aussie yen looks better than the Aussie USD because it clearly is performing somewhat worse. So, I think that answers any questions about the Aussie or the Kiwi, because clearly, let's go to the Kiwi, you'll see that the relationship is equivalent. There you go. You can see how tightly those are also correlated. And the Kiwi yen, right? And the Kiwi yen. All those are 4-hour charts, by the way, right? So, now you know what to look for. Now, let's delete this and go back to the charts. So let me go through some of your questions that I haven't covered. Crude, Euro Swiss, USD-TRY almost testing. Yeah, actually USD-TRY earlier today, I think it barely tested the water to new all-time highs. So as you see, incrementally, you see this is the line of the all-time high. And as you see, we have an upper wick that took us a little bit higher. So yes, USD-TRY at all-time highs. Needless to say that, you want to be long something against the dollar. Turkish lira is not the best option for many reasons. At some point, all of those are going to turn lower. But Turkey has a lot of issues with its economy. A big issue is definitely Erdogan. And his handling of the economy, I mean, he's in essence assumed the role of the central banker and everything else. So the economic decisions are not very sound. Of course, somebody will say, which country do you see that takes sound economic decisions? To be honest, it's becoming more and more rare. But anyhow, Turkey has big issues. So not a surprise that the Turkish lira is at all-time lows against the US dollar. And keep in mind, you don't have to be, very old. You just have to go back, for example, to 2008 and remember, believe it or not, that the Turkish lira was trading at 115 against the dollar, 115, and it's currently at 710.
Wow.
So you can imagine the damage to the economy with this type of currency depreciation, right? I mean, the Turkish lira has been, in essence, has in essence lost like something like 80% of its value.
Steve, how the notes look to you right before the interview? Last week when S&Ps were selling off, there was very little flight to quality. Okay, so they're starting to pop out of your little triangle here.
Yeah, but still, I mean,
I know.
is this a type of price action that you would call bullish? If we're talking about the yields, we're now looking at the 30-year and 10-year yields. I mean,
it could turn out to be, because we haven't made new lows in a long time.
Yeah, but I mean,
it's the most crowded, still the most crowded trade on the globe.
Unfortunately, I think that investors are calling it quits. You know what I mean, Dale? I mean, they're more or less like, F this. I mean, the Fed completely controls this market now. So,
do you know that one of the threats to punish China is for us not to honor the bonds that they own, not pay them on the bonds that they own?
I think
as damages, that would and bonds it's only the full faith and credit.
I think that decision would be suicidal.
Catastrophic. Yeah.
Would be suicidal. I mean,
I'm just letting you know. I heard it out there.
We've been talking about how the market remains oblivious to obvious facts. Barack Obama had, in essence, when there was the whole war on war in quotes, of course, on raising the debt ceiling, had in essence accepted that the whole debt market of the US is a Ponzi scheme. Of course, the US is not an exception, right? And how had he done that? By, in essence, openly saying that unless we raise the debt ceiling, we have to default. That is an omission that you're running a Ponzi scheme, because a normal economy can say, if we fail to raise the debt ceiling, we're going to have to go through a painful adjustment to honor our creditors. But we can't do it, of course. I mean, we're the US, we are a powerful economy. We can cut spending enough to be able to have a balanced budget like Germany does for 20 years. So we can honor our commitments by saying that unless we are able to borrow more, we cannot pay previous lenders. It's an omission that you have, that you're running running a Ponzi scheme. Now, imagine the market, of course, acted like that never happened, acted like this is just a political statement that has no real credible value having to do with how the US is really thinking about, credit, debt, etc. Now, imagine adding to that, saying that whenever I have an issue with one of my creditors, I will selectively default on their bonds, on the bonds they're holding. Now, let's say they do it against China. How comfortable would you be?
Right, I know. That would
holding
be the
US debt, no matter which country you were following that. So that would mean that from that point on, if you ask me, every single bond issued by the US would have to be monetized by the Fed. Every single one.
Well, I think there have been a few defaults in Venezuela, and investors still come in after every crisis and buy their bonds.
Which is also a proof. Of the huge moral hazard and how damaged the economic system is from moral hazard and monetary policy gimmicks. Because, for example, take Argentina is the best example, coach. Argentina has defaulted 5 times during the past 10 years or so. And they still managed to issue just a few years ago, 2 years ago, 3 years ago, when it was a 100-year bond. Can you imagine that? I mean, think about it. Economies are no different having to do with rules, not much different from us regular persons. Because, the basic economic concepts that apply are more or less the same. So imagine you have a friend that has defaulted 5 times during the past 10 years, and he comes and says, can you please lend me some money? Was there any chance in a million that he would find anybody to lend money to that person?
Yeah, I'm a sucker.
And still, there are people that actually bought those bonds. Guess what?
Yeah.
Last time I read about them somewhere, they were worth 20-something cents on the dollar. Actually, if I remember right, they were worth something like 30 cents on the dollar less than a year after they were issued. So I don't know what to say.
Okay. We have the interview. Ronit's here.
Okay, perfect.
If you're done, if you've wrapped it
Absolutely.
up. Okay. Thanks, Steve. And I still own bearish ETFs on treasuries. And, I would have thought last week they would have buried me, and they didn't. You know how sometimes when market conditions, normally you would think that you would be under a lot of pressure on those positions, and it doesn't happen. Makes you think if the tailwind shifted, it could work. So anyway, we'll see. Ronit, welcome back to Face, my friend, my Twitter friend. I've unmuted you. How are you? There were 2 of you. I hope I did the right one. You registered twice. I guess I could also do the other one. Can you try your
promote
mic?
the other one as well, and we see which one is.
Okay. See. So here's another one. So now there's, okay. Why don't you talk, Ronit? Okay, here's your second one.
I'm there.
Try it now. Hi, Ronit.
Hi, how are you?
Okay, welcome back to Face, my friend. How are you? How are things in India with everything that's going on? And oh, cool, you brought this kind of stuff. You know, I was after your charts, I was going to give you a chance to talk about your strong conviction and belief about how much of the unseen, invisible world originated in your country, in India. And I mean, there were even stories about how Jesus traveled to India. Maybe you learned a few tricks from your civilization. So go ahead and tell us what you have here.
So there is speculation that Jesus did travel to India, to Calicut, but I don't know. There is no evidence to it. So
Yeah.
we are just speculating. But
okay. So then
the trade route was phenomenal during Roman days, and India used to actually export a lot of spices,
right.
and that's how they got the gold. So, you know,
Silk.
it was
Silk
all about
too, right?
capital moving.
Silk Road.
Yeah, that's right. So through Egypt, and they used to do a lot of trade. And there was a time when they said that Indians receive demonetized gold. So in the coastal areas, people actually got less gold, but still they accepted it. So that's how the gold rich country, because we didn't have too many mines, so we traded a lot.
Okay.
So let's begin with something called cycles. So everybody talks about 666, right?
Yeah.
So it's nothing but 6 cube. So 1 minute. So 6 cube is 216. And you divide it by 2, you get 108. 108 is a sacred number in India and across the world. And that's how you get that 864. So 216 is into 4 is 864. So that's why people actually say, you know, it's a Armstrong cycle. But the Hindu calendar actually uses a lot of these cycles. We call it yugas. So let's see how the time is divided. So this is the smallest unit of time. It's called 1 nimisha, and it's 0.01777 seconds. So that's how the hierarchy is. So you can actually see how many human years, what's a solar year, and what's the highest, 1 day of Brahma. So we can't even actually expand it. So Brahma's life is something like, Brahma is supposed to be the creator of life on earth. So 100 years, which is 36 years. So let's move down. So I just wanted to start with it. So this is how people actually say astrology works in everything. So it's a combination, a right kind of operation. So this is, I think, our Greek friends will know. It's called Antikythera. Antikythera. So it's 1 minute. So let me.
I think Steven Stelios had one of those in their house.
No, I don't think it's
Steve
easy to
uses
make
it to grind espresso.
Or maybe coffee. Do they drink coffee in Greek?
What an interesting coffee maker, buddy.
I wonder where they pour the coffee beans from. So
what's that used for? So
Huh?
that's used for spotting.
It's some kind of ancient powered astronomy to check planetary actions.
Okay.
So no one knows exactly why it was found there, who built it. So it was found. You can actually look up. So let's get down to business. This is again the cycles. 100 years of Brahma is one time, and you can actually see the hierarchy. One Kali Yuga is equal to 4,32,000 years. So we can't even imagine. So the time is actually, in Indian standard, actually, each hour is something like 24 minutes. And we counted like 2 hours is 48 minutes, which is one muhurtam. So that's how people actually say it's auspicious time or not. So you can actually see here, 2 Nadika is equal to 1. So that's how time was broken down. Even W.D. Gann actually traveled to India. So that's how he actually discovered maybe.
Oh, yeah.
But again,
right.
we don't know.
Yeah.
So that's why he said time is the most important factor, just like Nikola Tesla.
Okay.
So let's get on to charts. So this is the Dow chart. Now let me expand it. So how I actually knew it could be a huge top was from this. So what I did is I drew channels, and I connected 1974 bottom, December, and 1987 bottom. So I expanded it. So you can actually see 158, 161. That was of GFC one. And the 29,400 or 29,500 was the high. And it timed with Feb 2020. So it says that it could actually go till there. You know, it could expand till September 2021 when things don't get resolved. So I was very surprised that they locked down the whole world. So this is again the famous 2020 W.D. Gann financial table. So you can actually see over there 2020F, which is the year of the panic.
Stand for panic. F is
Panic.
panic.
Yeah, F is panic.
Okay. Interesting.
So even previous years you can see 2001, that was a panic.
Yeah.
So maybe W.D. Gann was a genius to pick this. So this is again the Dow. Now the most important thing about this Dow is what is the price of gold. Okay, you can see over there in 1980, maybe you're trading at that time. So 800 Dow was equal to close to $800 an ounce.
Yeah.
So if that has to happen, then the top of 1987 should be the Dow value, or we have to see how it goes. So we don't know yet.
Yeah, you know, I forgot that they. I remember working out in LA back then, and people had a bet that gold would surpass the Dow, and I remember that was 79. That's when it happened. So, and thank you for a trip down memory lane. Forgot all about that.
Yeah. So you can
Most
see the
people,
channel
modern
in
traders, would never believe that the Dow and gold were the same price. Maybe it's going to happen again here, huh, Ronan?
It depends on what price.
Yeah.
So that's how I link. If the channel doesn't come down, what should be the price of gold? $15,000? Or the next channel, which is around 1987, that's around 10,000. It's just a question of where do they meet. So we'll see that. So it's all about confidence. Where does it break? So let's go on to the next chart. So this is actually a Dow gold ratio. 1 minute. So how I figured it out that gold will start outperforming. Can you see it clearly?
Yes.
So what is the ratio? So it's around 18.81. So if the Dow has to hit something like 10.74, what should be the price of gold? So if Dow hits 10,000, maybe gold value should be somewhere around 1,200 or 1,100. It's a combination. What comes first? But clearly we can see that in the Dow is actually underperforming gold. It actually took off in 2013. And after Trump was elected, again, it started underperforming. So let's look at the next chart. So this is, so everybody keeps saying that dollar and Dow could go both up. So it's not necessary. So correlations work sometimes, they don't work sometimes. So we can actually see that though the dollar didn't underperform or outperform, the Dow actually broke everything. So the minute gold and DXY actually started rallying up or strengthening up, that's when all these things, all world markets start breaking down. So let's say if they contain DXY at 100, maybe. So the breakout for the Dow again will be 25,500. And if they are not able to do it, so maybe we are looking at a much lower level in the Dow as DXY actually starts outperforming. So this is again the Dow DXY. Okay, this is very interesting. So gold and DXY. So it's forming a wedge, and this could be bearish, and we have to see what underperforms. So 100 DXY is very critical. So if actually both start going up, we have to see what price. So if 1840 gold and USD has not surpassed 100, then it could be a possible top. So, but if actually DXY actually hits say 110, gold could be 1960 or something like that. But on the but again, in this chart we can actually see gold is outperforming dollar in percentage terms.
Yeah.
So let's look.
And you're kind of a super bull on the dollar, aren't you?
Yeah, we actually will see why. So let's look at this chart. Can you see this chart?
Yeah.
This dollar.
Right.
So it's a cup and handle. So so can you tell me how many points it can move if it moves 100?
You're
So
the one
50%.
being interviewed.
That's 50%.
Okay.
So if it hits 150 in a hurry, so other currencies actually fall 50%.
Wow.
In a hurry. So the impetus was there in Jan 2020. What led to that impetus, I'll explain further. So everything started in April 2019. So this is a very critical chart. So this is another correlation which broke. This is nothing but Dow divided by crude oil. So it was not supposed to break out, but it did. And that's the reason there was a huge panic. So it has never outperformed. So let's look at this is a chart of Dow and copper, right?
Dow and copper.
So it's still not broken down. Copper.
Okay.
So that if it does something like that, like crude, we could expect a very lethal move. Something like crude.
You mean copper going to like, a buck?
One, yeah.
Okay.
We'll see that further. And it could be very quickly.
Before. I've seen that before. I've seen 60-cent copper. 50.
Maybe it'll go to negative. These days, everything goes.
Oh yeah,
to negative.
Yeah. Unprecedented.
So let's look at this. So this is very, very interesting. 1 minute. My mouse is moving quite fast. 1 minute. So this is Nasdaq and gold ratio. So you can see the cycle. March 1990 to November 1990. That's when it started moving. That means gold underperformed and Nasdaq stocks outperformed. That was the time when globalization started.
Right.
So more dollars flooded the world. And we saw the same thing in 2009, 2010. Again, more dollars. So it could be a cycle. So maybe Nasdaq underperforms gold.
Yeah.
Purely
Failing
possible.
rally, just a retrace of the last decline.
But the cycle could be very painful. So let's say it started around 2018, trade wars.
Yeah.
It could be something like 10 years, but we don't know yet.
Okay.
So let's look at it. Another cycle. This is again the semi-log cycle. So you can actually see if 4.66 breaks, then you can actually hurry down further. Gold need not move. So let's look at next cycle. This is Nasdaq, only Nasdaq. So it actually topped out just on the same fan. So around 9,200. So if it has to crack, somewhere around 6,000 is the pressure point. So this is a combination. Next chart is very interesting. So everybody talks about Amazon, Google, Microsoft.
Yeah.
It's the combined index of that.
The fangs.
The big four. I
Okay.
didn't add Facebook. So
Okay.
this is the highest market cap values. So Apple, Microsoft, Amazon, Google. So they're also forming a wedge. So they're about to break a wedge, but it could happen again. So we need to watch out all these four stocks together. So let's look at the next cycle. This is nothing but Dow divided by Nasdaq. This tells you that Nasdaq has been outperforming. It's close to the 2000 highs. So if it has to underperform, if Dow starts falling apart, Nasdaq will underperform even faster. So
Okay.
what really happened in April 2019? So you're able to see my screen?
Yep. Global gold reserve holdings.
Yes. So everything started in April 2019. So maybe someone actually dumped and bought gold. So we'll see it in our further figures. So that was when I was trying to explain in my last interview that the debt divided by gold, gold has to rise from here. This is fundamental, but that's technical. So we'll see that. So this is one more skyscraper curse. So the Jada Tower, which was actually started in April 2013, it's almost completed, but they stopped it right on the trade war. And they might reopen 2 years later. So we can see other financial crises, the Burj Khalifa, the dot-com bubble. So this was very interesting. The Great Depression was one of the most unique. There were 3 towers in between. So it tells you that possibly stagflation is there. So let's look at this chart.
The Tower of Babel.
It could be. So that's there in every religion, actually. So not just, whenever you get rich, the credit cycle starts when somebody finishes a building. So we don't know yet. So this is actually Tadiwal's Saudi Arabia index. So if you actually see what really happened in 2014, they started losing money. And you can see May 2019, that's when it started turning down. So it could be possible that Russia and Saudi are together in this. We don't know. So everything started in April 2019. So this is again the index of log. This could mean that oil is actually going to be in a bear market for the next 25 years. We don't know yet, but an interesting thing happened actually. So Saudi was created in 1933, right when the Great Depression bottomed. So if you add 86 to it, it comes to around 86.4. It comes to around December 2019. So that's very interesting.
Yeah.
So they actually sold at the peak. So this is the most interesting. So if dollar has to go up, that means Saudis will lose more money, and it could mean that it could go down to something like 1985, 86 less. So this is a cup and handle. So you can see how deep it can get. Either the dollar goes very high or the Saudi index will goes down. This is again the oil. I think that this was a computer model which actually created that minus 40. So if you actually draw a parallel channel, you can actually get 40. So this is where someone knew that Iran tensions and the Gulf were happening. And then the story was cooked up exactly at 50. So this broke down and the dollar spiked at the same time. So what is the connection? What is the real story? We don't know. But it's again a cycle. You can actually see the mini cycles. So there's a peak, there's a trough, there's a peak. It goes on. And this could be a bottom somewhere around September 2020. Though the chart shows negative values, but you have to consider the cycle. So let's move on to the next one. So history of US short squeezes. So someone was talking about euro-dollar system. So 80 billion was outside the US, and in the year 2000, it was around 3 billion. Now till 2015, it's 9 trillion. Maybe it's doubled. So this is again one more interesting. Kuwaitian dinar, for the first time, it is broken out. That means their currency is depreciating. So USD Kuwaitian dirham. So look at the cycle. 2008, 2014, maybe it's going to go higher. And it just spiked. So no one thought it could happen. So let's move on to the next one. So this is a cycle of Kuwaitian dirham. Can you see it clearly?
Yes.
So 2008, 2014, and I don't think the dollar is bottomed out. So it could go much higher till 2022 or 2025. So this is the Jada Tower 2013. You can see over there, April 2019, 9 years, it'll be open in 2022. Maybe God had different plans. And the best part is, this is 1,000 meters. 3280 or 3.28 is considered as a qubit. So time and price and sentiment meet at a point. So this is again Saudi Arabia, 2014. As the dollar appreciated, their reserves went down. So maybe after 2021 till 2025, it could go down even further. That's why they're borrowing. So this is again one more interesting. IMF paper was actually written in April 2019, enabling negative interest rates. So this is how gold spiked on the same day. You can actually check the dates. It was around 1278 or something on the dollar. I mean gold.
Okay.
Okay. So let's move on to the next one. November 2000. So everybody says coronavirus was the reason for market meltdown. Maybe they actually introduced the coronavirus to hide something else. So November 2018, designing central bank digital currencies. So let's look at the next one. So nothing happens by accident. So Christina Lagarde, you can actually see May 2019, she actually said that we need 12 months to actually bring digital currencies online. So they know that euro and other currencies are in trouble. So, and I would say that Zoom Communication, they had an IPO on the same month. April, May 2019. And it was $60 in December 2019. Now it's something like 160, 180. So this is the euro big picture. So 0.6 was in 1985. So it went all the way till 1.6.
Right.
So that's the reason 1.085 is being protected. So if that melts down, maybe it's the end of euro. So you can actually see this looks like a cup and handle. We don't know yet, but a waterfall decline could be possible. That's why dollar is not spiking above 100, or maybe somewhere doesn't want it to. So let's move on to the next one. So this is Dow divided by Saudi Arab index. So this also again tells you that Saudi Arab is in trouble. This is again a cycle. You can see it. 1992, 1999, 2000. Maybe we skipped a cycle. So it tells you 2026. Saudi index or the oil market could be in trouble. This is again
interest rates.
DXY divided by Saudi index.
Okay.
So what does it tell you? Dollar is going to surge, irrespective of what happens. Okay, it's almost on the breakout.
Okay.
So let's move on to the next one.
I have a question. Jane would like to know if you have a question for chart for Bitcoin.
As long as it holds 7,200, it's fine. But something goes wrong, the dollar is the Bitcoin.
And Nareej Jane is saying, please see IOC and Larson Indian stock chart. Do you know what that is?
No, I don't know, but I'll be happy to help them. If they can tweet me, I'll actually help them out. So let's directly go to the gold values. What could possibly go wrong in May? So if it breaks 1672, it could retest 1270 or 1150 again. Maybe they want everyone to liquidate. But if it stays more above 1700, so you can actually see it's a cup and handle again on the top. So that's $1,000 move. So the pressure point is around 1803. So it goes further. The scenario is different. But if it goes down to 1279, don't panic. It'll come back again. It's just a shakeout.
Okay. So we're starting to run out of time, but go ahead. And what I'd like is, say for example, you had a fresh 100K right now. What would you be doing? Would you just be sitting in cash and buying gold? What kind of, if you're not a trader, are there any investment type positions that you would put new money to work in with what's happening today?
I would avoid any investment till 2021. But because there is, in astrology, they call it a Kal Sarpyog, which actually could be for the next 18 months. So you need cash, maybe 30% is good enough. Gold to protect that cash. And you should look for emerging things into 2025. It could be technology, but you have to survive this. So
so it's a capital preservation phase, the return of capital, not return on capital.
Maybe return of equity is not, return on equity is avoidable. Return on equity is more important, because this period which started for whatever reason, everybody keeps saying that 18 months in our astrology thing, it's actually a bad time for the whole world. Means capital destruction. So whatever you have, I think dollar will do fine unless they do something else. And this could be a war cycle also. So let me explain. 1914, you keep adding 26 to it. 1940, World War I. 1966, again there was a turmoil. 1992, Kuwait War, there was a disturbance. 2018, trade war. Let's go back. 1914 minus 26, 1888. What happened in 1860?
Your Civil War.
Yes. Let's go back. 1810, Napoleonic Wars. So this period
War of
is such that
1812 too in the U.S.
Exactly.
Yeah.
So there are periods when people get, desperate to divert attention. The funny part is that India could be actually be getting into a big conflict with Pakistan. So let's look at 1971 plus 27. You add another 27, it comes to around 2025. So 2022, 2025, it's possible. You subtract minus 9 from it. 2016, we actually had a big conflict with Pakistan.
Yeah.
And it all rotates around that one belt, one road and the Gwadar port. So it's economic reason. And this whole coronavirus, why they're actually looking with 5G, it could be because of IP rights.
Because of what?
IP rights, intellectual property.
Oh, okay.
So that's the reason Wuhan was the center for 5G too. They arrested Huawei's president's daughter, right? Or CEO's daughter. Just exactly around December 2018. And this whole 5G was all about that. So maybe US doesn't want to be left behind. And I was reading an article where China is actually getting very aggressive with China wants possible armed conflict. So this is all about control. So that's why I said you got to watch. Have some gold, have some silver. Look for food, clean food. When the tide is over, I think you'll get better opportunities. So I'll pass on this document, and anybody can actually look at it since we are run out of time. So everything is a cycle. So watch out for 1700 gold for any kind of any clue. So last thing I'd like to finish, Dow gold ratio. This was around 5.7, 5.8. This is around 23.8. So that comes to around 17. The breaking point is around 18. So this is seen across all indices. It's not just one index. It all started together. So watch out for the currencies. They're not going to stop at 5-10%. So once the dollar goes through, you can actually see in this one, this is nothing but Hang Seng divided by gold. Maybe their peg will break soon.
Yeah.
So all pegs will break at some point. So this could be it. This could be a confluence point.
Yeah, what a great presentation, both telescopic and also very holistic with all the different intermarket related charts. Thank you for your the hard work and the great PowerPoint presentation today, Ronan, of very interesting ideas and kind of sounding the warning bell for people to be conservative. So we appreciate you coming here and edifying the community, Ronan.
Thank you, Dale. Thank you for it. This one last chart, you can look at it. This is dollar into gold. It's rising together. Mm-hmm. So with that, play safe. This is not a normal market. Standard deviation models are breaking.
Okay, and the best place to reach you and follow you, Ronit. Ronit's in my Twitter stream. Ronit's Twitter handle is @Ronit, RONIT 9Q. And that's probably the only place to follow you, right?
That's right.
Okay. So Ronit does a lot of tweeting of his ideas. If you like what you saw here, you're going to get more of it on Twitter at Ronit9, number 9Q. Thank you, partner. Appreciate
Thank
it.
you, Dale. Thanks
All
for
right,
having me.
good hunting. Enjoyed it. Okay, everyone, that's going to be a wrap for today. See everyone tomorrow. Good hunting. And remember, don't just count your pips, count your blessings, and we'll see you all tomorrow. Adios.